Take a look at those headlines now. We've got presidential candidates sounding off on their reaction to what's happened over the weekend with Silicon Valley Bank and New York Signature Bank, but also the federal government's response there. But also some other headlines. You've got the Federal Reserve promising review of Silicon Valley Bank collapse. And President Joe Biden yesterday saying that the banking system is safe. He says, what do you think about this? I'd love to hear your thoughts. We'll get to that and some more detail of various responses. But I wanted to share with you some of the take from the Illinois Bank Association, the Bankers Association here in Illinois, saying that things are solid and the banking institution in Illinois is safe. Ben Jackson, he's vice president of the Illinois Bankers Association. I chatted with him yesterday. Here's what he ultimately said was a main takeaway he wanted people to understand.
Sure. Well, thanks for having us on. And we're watching a lot of this like others are. These are institutions that were out-of-state institutions, not in Illinois. So we're watching this unfold like a lot of your listeners. I think what we're trying to just convey to Illinois consumers and depositors right now is that their deposits are safe. They're insured through a very well-established federal government program, the Deposit Insurance Fund through the FDIC. You see that little FDIC logo on the doors of banks and thrifts across the state. That means your deposits are protected and insured. So we're trying to get the message out that that still remains, and also that Illinois banks and thrifts are in good financial condition. They're in great shape, actually. So we think these situations that occurred out of state are isolated, and that the banking industry in Illinois is strong.
And to that, statement that the banking industry is strong, how do we best understand that? I asked him to kind of put it into simple terms as to what happened with SVB and other banks that collapsed.
Yeah, so, it's kind of hard to comment on the specifics of these failures. Again, they were outside of Illinois. From what we're reading and hearing, like a lot of your listeners and probably you perhaps, is that these were banks that generally had clients that were in areas that pose some risk, such as, startups, cryptocurrency, that type of thing. And, they had situations where depositors pulled out and the banks didn't necessarily have the liquidity. And again, those seem very specific to the banks that, where those instances occurred. And certainly we don't think this is a systemic issue. We think it's isolated and specific to the cases that each bank was dealing with.
Now, Silicon Valley Bank, of course, it collapsed on Friday. You had the FDIC take over New York Signature Bank on Sunday, but also apparently yesterday there were several banks that suspended trading with significant sell-offs and a drop in price and so on. So is this just a simple several banks, or is it something that's going to spread? What kind of regulations were put in place since the 2008 global financial crisis that led to the Great Recession? These are obviously some questions that still linger. Ben Jackson, vice president of the Illinois Bankers Association, talks about some of those regulations.
Well, I think it's important to realize, frankly, what regulators have done in that time. We've had the Dodd-Frank Act that passed at the federal level, and we've had regulators that pay more attention, and bankers as well, to capital, making sure capital is stable. There are good sources of capital and enough capital in each bank. And there's, frankly, just better controls internally, fewer instances where there's external influence on a bank's operations. So the reforms that have occurred over the last 15 years certainly have made the banking industry more resilient. And I think that's why today you see banking regulators come out with statements yesterday and today that talk about the strength of the financial system, that there are better safeguards in place, and that we are in a better place in terms of protecting deposits and providing loans to customers.
Now, one thing that President Joe Biden said yesterday, and it was made clear over the weekend, was taxpayers are not going to be liable for the losses at these banks when it comes to the banks and their investors, while depositors will be covered and secured. It's the investors in the banks that will not be covered. President Joe Biden saying that that's capitalism. You make a bad investment and you got to pay the price. But the depositors who put money into those banks, Biden said, are going to be fully taken care of, but not by tax dollars. Ben Jackson with the Illinois Bankers Association reiterates that.
That's right. So the Deposit Insurance Fund is, the funds there to backstop Americans' deposits are funded by banks. So banks pay quarterly assessments based on a very specific formula and by, also based on thresholds in the law to reach a certain funding level. We're still working to hit specific benchmarks that were established in the Dodd-Frank Act, as a matter of fact. So there is a process here for ensuring that there's enough funds held by the Deposit Insurance Corporation to backstop depositors' investments. And that is the mechanism that the president referred to make sure that taxpayers aren't liable for any losses.
So yesterday, having the president make that announcement, we heard it live at 8 o'clock, and all the fallout from thereafter with other banks taking some losses, but not necessarily being taken over by FDIC. Ultimately, though, it's the local community banks that Ben Jackson with the Illinois Bankers Association says really are confident, and they want to hear from you, their depositors. And that's kind of a last message he wants to get across to listeners is Illinois banks are insulated and they want to hear from you about your concerns.
Well, I think the biggest thing that your listeners should keep in mind is that, banks aren't afraid of talking about what their customers' needs are. So if a listener has a question, reach out to your local banker, stop by a branch, and talk about what your options are, talk about how your portfolio is managed in the bank, and look at your options. A banker wants their customer to feel secure that their deposits are going to be insured and that they're going to be available when they need them. So have those conversations, and we think that that's an important takeaway for your listeners.
Again, that's Ben Jackson. He's vice president of the Illinois Bankers Association. I thought it would be good to hear their reaction and thoughts after what we saw happen over the weekend. I don't think it's going to be the last we hear about this, but coming up next, we'll go through some of the other headlines, how presidential candidates are sounding off on this issue, and more. So stay tuned. It's Springfield's Morning. We can open it up to take a few calls to get your thoughts on the banking situation, the status of the financial institutions across the country. And that number is 217-629-7970. You can also email me, bishoponair@gmail.com. So get those thoughts in. Some comments on YouTube. Tattooed Squirrel, fascinating name, says, does anyone really believe Mr. Jackson? I guess the last voice we shared, Ben Jackson from the Illinois Bankers Association, who's in charge of the states that has seen the worst credit in history. Is JB's money going to back the state? Doubtful. Kevin on YouTube says, just say no to the digital currency. They're getting ready to drop on Americans. And that's something I think is an interesting kind of thought here as far as the idea of advancing a central digital currency, a central bank digital currency. Because right now there's a whole bunch of digital currencies. One in particular is decentralized, and that's Bitcoin. That seems to be the so-called gold standard of digital currency because it is decentralized. It's not reliant on a central bank from any country like the Federal Reserve in managing its funds. And it's also finite, meaning you just can't open it up and add zeros to the spreadsheet. There's only going to be about 21 million Bitcoin mined, and I think it's at like 19 point some odd million, if not getting even closer. So it's finite and it's decentralized. And the blockchain is a tool that Bitcoin utilizes that is non-fungible, that you cannot manipulate, that has to be, essentially confirmed by separate nodes around the globe in order for it to actually be sustainable. But if you go away from a central bank digital currency to rather from a decentralized digital currency like Bitcoin to a central bank digital currency, then you get into the questions of, well, how are your social movements going to be controlled if, say you're cohorting with a group of unsavory individuals and the government doesn't like that. They see that your phone is close to this group and then they can just essentially limit your bank account, or they'll only let you spend the digital currency on things that are approved instead of, possibly having anonymous transactions, which is something that cash really does do. It provides that anonymity. Some even saying that Bitcoin can provide that anonymity. There's ways to go about it, even though it's on the digital blockchain and so on. So interesting to see some of those arguments. But when you look at the ongoing, political questions here, some of the presidential candidates chiming in here. Nikki Haley condemning President Joe Biden about the bailout of what she calls is the bailout for Silicon Valley Bank. She said Joe Biden's pretending this isn't a bailout. It is. She said in a statement. She goes on to say, now depositors at healthy banks are forced to subsidize Silicon Valley Bank's mismanagement. When the deposit insurance fund runs dry, all bank customers are on the hook. That's a public bailout, she said. Depositors should be paid by selling off Silicon Valley Bank's assets, not by the public taxpayers. They should not be held responsible. You've got Vivek Ramaswamy. He's a Republican looking to get the GOP nomination. He said that I think that we really need here is fostering a culture of greater due diligence by market actors to not have just rely on the government to do their work for them. So much more due diligence needed. Former President Donald Trump chiming in as well. And a lot of people have said, well, it's because of regulations that Trump rolled back, even though there were bipartisan movements to roll back some of those regulations. Trump, he said on Truth Social, with what's happened to our economy and with the proposals being made on the largest and dumbest tax increase in the history of the U.S., ×5, Joe Biden will go down as the Herbert Hoover of the modern age. We will have a Great Depression far bigger and more powerful than it was in 1929. As proof, the banks are already starting to collapse, Trump said. So interesting to see some of the comments there. We'll actually hear a little bit more about this. We'll talk with Congressman Darren LaHood later on in the show, just after the 8 o'clock hour starts. We'll ask him about the banking situation. We'll ask him about COVID-19. We'll ask him about the FBI and so on. So a lot more to come here on WMA.